let's check in on the PG&E saga. The California utility filed for Chapter 11 bankruptcy protection. Shares of PG&E up 17% when we walked in the studio. Am I supposed to put this on my watch list now? I mean, we've talked before about how, look, this is a utility. It can't just go away.
Right.
But
right.
But I just assumed it was going to reappear in some form that maybe was completely removed from the public markets.
Yeah.
Am I now supposed to think, oh, well, maybe there's not just a future for this utility, but a future for investing in this utility?
Oh, yeah, absolutely. So utilities are so weird. Like if you produce a product and it, for example, catches on fire and you get sued for it and you don't have money to cover it, you go out of business and that fire producing product doesn't get produced anymore. You can't do that with utilities. You can't say, well, electricity caused electricity or the production of electricity caused these fires in Northern California, companies going out of business. Let's just produce no more electricity in Northern California. There's your solution. What's going to happen? So there were fires in 2017, and the California legislature, the California Public Utilities Commission, passed a ruling that allows the utilities to pass on the costs of the liabilities for such events onto rate holders. So, good thing that they did too, because, otherwise we would have an enormous financial issue with PG&E. So yes, it's going bankrupt. It has sufficient assets to cover its cash liabilities. It's going to come out of bankruptcy, restructured. The equity will, in all likelihood, have some value. The bonds were trading at 85 cents on the dollar earlier. I think that they will rally. What you have now in this place is a plan.
Are you interested?
No. No, because, here's the thing. It is going to become much more expensive to produce electricity in this country for a couple of reasons. One, because the slate is changing, and we can argue over global warming a little bit, but utilities are having to respond. Right. They're having to change their slate. The cheapest forms of energy, coal, nat gas, oil, are being ramped down. Other forms are being ramped up. But also these types of liabilities are popping up a lot more as well. And you could say that it's because of climate change. You could also say because it's a change in how people live. The town called Paradise, which is where the fires were and where the most damage was, where the houses were destroyed, was probably not something that really would have existed in the same form even 40 years ago. It was largely a retirement community. People, as a change of lifestyle, went up and lived in the woods, right? And so no, I don't find utilities to be a very exciting investment, because they will be boring until they are exciting in the exact wrong way.